Henry Ford said almost 100 years ago that it was best for most Americans not to know how banks worked, because if they did, there would be a revolution the next morning. The quote credited to Mr. Ford seems to be just as true now as it was in the 1930s, even though many years have passed since it was said. It's not a bad sign that people want to start banks. Yes, banks do very useful things for us and are now an important part of our lives. Every person wants to keep their money in a safe place. It's not a good idea to hide your money under the bed. You don't want to hide your money in a hole in your garden either. The truth is that banks are making a lot of money, and most of the time, the public doesn't know it. However, because financial institutions are run in strict and complicated ways, some strange activities are kept from the public's view. We're all in this together, no matter which side you pick. There are many ways for banks to make money off of you, like when you borrow money, spend it, or save it. It's sad that you don't know you're being milked. One reason why bank stocks have become so popular with investors is that banks have a lot of ways to make money. Some things banks don't want you to know about money are listed below. 7 facts you need to know about money. 1. Every year you lose money. Most likely you've heard that banks are great places to store your cash. But no one has told you that when you do that, you lose money every year. This isn't about banking costs or someone stealing your money. It has to do with prices going up. The prices of things and services going up over time is called inflation. It means that something you could buy today with a $50 bill will cost a little more in a year and a lot more in 10 years. You would think that the money in your account would stay the same value over time, or even get bigger because of interest if you think it is safe. This is something that all investors want, but most bank accounts don't really do that. In the United States, inflation is usually around 2%. When you put your money in the bank and get a return of 0.05%, you lose up to 1.95% of its value every year. I'm not talking about the money you put into financial systems in the hopes of getting it back. That is not what I mean. What I mean is the money that is just sitting in your savings or checking account. Now, I hope this video has been useful to you so far. If it is, I would like you to complete the following right now. If you like this video, just pause it, click like, and then choose to follow this channel by subscribing. That way you'll know when we add more videos like this one that are meant to inspire you. Done? Good job! Let's keep going. 2. Banks make money when you use a credit card. To begin, banks make money through handling fees every time you use a credit or debit card to buy something. The seller pays the fees, but you might not know this since you were only charged for the item you bought. The seller could have added these fees to the price of the item because he didn't want to lose money. Here's another way to look at it. Let's say you used your card to pay for something that cost $500. For every payment card transaction, the business will have to pay 3%, which adds up to a huge $15 fee. The bank only gets this money for having the tools and making it easy to pay. For what reason do you think the business owner will be glad to lose $15? This fee is on you, and I'll show you how to pay it. It's possible that the item was meant to sell for $480. The owner must have put a $500 price on it. The extra $20 will cover the 3% fee that the bank will charge for card transfers, taking into account the fact that most people would rather use a credit card. Second, your credit card gives the bank a lot of money. There's a reason why banks give you so many perks just to get a credit card. You might not know this, but the interest rates on your card can go up at any time. The standard interest rate on a credit card is 17%, but your bank could decide to raise it to 18% or 19%. After giving you 15 to 30 days notice, they could do this. Most of the time, you don't read these letters with lots of legalese. You just ignore them. Banks are able to get away with this because you don't bother them. Now, if your credit card interest is compound, it will just keep adding up. If you don't pay off these debts, this will finally turn against you. You might be about to have a hard time with money. In and of itself, the idea of a credit card is not a bad thing. No, the credit card is a useful service that makes things easier. It's become a normal part of our lives for most of us. Being careful not to get too much debt, though, is important. That is a bad place to be. Make sure you pay off your bills every month. 3. The money in the bank is not real. Even if you have a lot of cash in the bank, only numbers and computer records will show that. Banks need your money to run their businesses. This money is given out as mortgages, business loans, or car loans. You think your money is at the bank, but it's really making extra money for the bank somewhere else. This fact came into play in 2008 when the economy was bad. People were scared and went to the banks to get their money, but the banks didn't have enough cash to pay everyone. The banks could have that much cash on hand, but there won't be any cash on hand if there is a crisis and everyone runs for their money. For this reason, a plan known as fractional reserve banking has been put in place. Because of this rule, your bank can give your money to people who need it through mortgages and loans. Does that mean you shouldn't put your money in banks? Not at all. Insurance will protect your money. The government is also there in case something goes wrong. You can close your eyes and go to sleep if you have money in the bank. Just know this. Putting money in the bank is not the same as putting it in a box that you can get to at any time. This time, your money is making money for the bank instead of you. You can get to your money whenever you want if you're alone, but if everyone wants it at the same time, no one gets it. 4. Bankers are not your friends. You must have thought they were your friends before. They know your name. They call you a lot, talk to you, love you, and adore you. On your anniversary, they celebrate you and remember your birthday. There you have it. You're hooked. These people really don't love you. They're just following a well-rehearsed script and waiting for the right moment to act. A banker friend of mine told me how to make a customer like him. He does everything I said before and earns their trust. They trust him and don't think he's working for the bank. After that, he talks them into taking out a loan they hadn't planned on. Can you picture taking out a $50,000 loan that you didn't plan on using? Having this kind of friendship with lenders, though, leads to that. The numbers are all that matter to them. Their managers and leaders give them goals to work toward. They will lose their job if they don't meet these goals in record time. So did my friend. She told me that some coworkers lost their jobs because they tried to be real. Because they really cared about their clients and showed kindness. They failed to meet their goals. When the boss found out, they were shown the door to leave. You should be careful the next time your banker friend comes over with a big smile and talks about the newest deals his company is offering. It's important to make sure you need and want a loan before you sign up for one. Do not let a fake friend scare you into giving up your feelings. 5. Fees for doing business abroad. FX transaction fees are another way that most banks make money off of their customers. You won't hear this from your bank, but when you use your credit or debit card to buy things outside of the US, you will be charged more. Before, a friend took a trip and spent 15 days outside of the United States. He was shocked when he got home and looked at his bank account. He found charges for foreign transaction fees that added up to $105.05. These are all things that most banks won't tell you because if they did, you might leave their bank and look for another one. There are credit card plans that cover things in countries besides the US. This means that if you use their services in a country that they offer, you won't have to pay extra for your purchases. My friend was milked, though, because he didn't know this and wasn't in any such scheme. 6. Always look at your money. Checking your bank account often is important, so don't put it off because you're busy or lazy. There may be charges on your record that you are not aware of. As soon as you see a charge that isn't yours, call your bank right away. By law, your bank has 48 hours to put the money back into your account after you report it within 90 days. This is something your bank doesn't want you to know. They may try to slow down or get out of the process, but the law protects you, so you can stick to your guns. You have the right to get your money back from them. 7. Someone is watching you. Banks keep track of everything you do with your money. Banks are required by law to tell the IRS about any strange financial behavior. The goal of this rule was to stop shady deals like money laundering. The IRS is told when a depositor takes out more than $10,000. If the IRS needs to check your account, they will send you questions asking you to explain certain activities. First, the government wants to know if you tax the money. The second thing they want to know is if the deals were legal. You are being watched as you spend your money, so be careful. You might be able to stay clean and out of trouble now that you know this. That's all there is to the video, folks. I hope you discovered something new. Please give this video a thumbs up if you liked it, and this kind of content if you liked it. Also, follow for more content like this. Goodbye for now, everyone. Have a great day, and I'll see you in the next one.